We are standing on the floor of the New York Stock Exchange, joined by John Love. He is the president and CEO of USCF Investments, and today you're the chief executive. Today we rang the bell, you rang the bell for the 10th anniversary of the first oil exchange traded fund. That is your fund, the United States Oil Fund, USO. And you have the largest oil and natural gas exchange traded funds in the United States. So congratulations.
Thank you very much.
On 10 years.
Thank you.
How does it feel?
It feels fantastic. We were out on the exchange floor 10 years ago and gave everybody little yellow hats to announce the rollout of USO, and so it's great to be back and to stand here.
Did you anticipate the growth that you've seen in exchange-traded funds from 10 years ago to now?
We hoped. There was definitely some trajectory at the time in ETFs. We were about the 350th or so ETF to launch. Now there's well over 2,000. So we had a feeling they were going to grow, but it's definitely been fantastic.
There are roughly $2 trillion invested in exchange-traded funds right now. The path is that we'll see that double in the next 5 years, and according to experts, that could go up to $6 trillion, maybe even $9 or $10 trillion by 2021. Does that sound about right? And what is the allure of exchange-traded funds? Do those numbers sound correct to you?
They sound possible for sure. There's, I mean, investors are actually quickly discovering ETFs. They've obviously taken off, but more and more people are finding them to be a great way to get into the different asset classes, not just equities, but bonds, stock, commodities, everything.
And that's what you have under your umbrella. It's my
Correct.
understanding you have 12 exchange-traded funds. One is equities, the rest are mostly
That's
commodities.
correct.
And some of the attraction for investors, from what I've read, easy diversification, low fees, and tax efficient. Can you elaborate on that?
Sure. Well, equity ETFs definitely are tax efficient. The way the mechanism works is that instead of buying and selling the stocks yourself, the ETF does it with market makers, and so the tax burden is reduced for investors. Now, it's different with the different asset classes. Commodity ETFs, depending on their structure, may offer a K1, and if they're using futures contracts, you'll have a 60-40 tax structure.
I want to bring it back to the regular person. I know that you have institutional investors, you have insurance companies who invest in this now. It really has gained in popularity. But for a regular person who wants to have some diversification in oil, for example, they would get into these exchange-traded funds, and they could mimic an index, or they can have a manager actually run that fund. But it's not foolproof. Can you explain some of the risks that are just like the market?
Yeah, well, definitely. I mean, you obviously have spot risk. Just as we've seen in the last 2 years, oil has been under a tremendous amount of pressure. You have, this year alone, we've had a tremendous run-up, and now we're kind of declining again. But you definitely have the spot risk. You also have, depending on how the fund is structured, as I mentioned, if you're using futures contracts, there are some mechanisms that kind of can weigh on returns, or actually give you
well, since you're so into the markets, heavily invested in many ways, what are your growth prospects for the economy, for oil? Where do you think we're headed?
Well, the economy in general, I think it's kind of hard to say. We're in a very strange place with just consistently accommodative monetary policy, which makes it hard to kind of say, here's what's worked in the past, here's what will work in the future. With oil itself, I think that it's going to be under pressure for a while as we're coming towards the end of the summer. Some of the optimism from the start of the year is fading, especially as drillers have come back online. We've added about 50 rigs since May, and the supply overhang that's been there is not diminishing that much. There's been a seasonal decline, but it is not nearly what I think we need yet. But as we get towards the end of the year and go into 2017, I think we'll start to see more market balance, as long as there's not some other unexpected event.
Right, which seems so many at these days. And you mentioned accommodative monetary policy. We've seen, obviously, the Fed holding rates at record lows with just one rate hike. Your anticipation for rate hikes?
I don't typically take a view on it, but I'd say, I mean, from everything I understand, I'm guessing that they're going to reverse course, and we'll see what effect that has.
Reverse course?
Well, I don't know if maybe I don't think that they're gonna hike, and I think that the possibility exists that they actually look at being more accommodative. Maybe not in cutting rates, but in some other way down the line.
And your love of ETFs, give us just from your heart. It's your 10 years. You're the largest ETF for oil and natural gas.
ETFs, they give investors access to things that they didn't have access to before. In our case, oil or commodities in general. And I love them just for being able to get exposure to things easily and at a low cost in ways I couldn't do before.
John Love, thank you so much for being
Thank
on
you.
Fox Business. We really appreciate it. Congratulations
Thank you
on
so
your
much.
10 years and ringing the opening bell today.
Thank you.
USCF Investments, and you're based in California. Thanks,
That's
John
correct.
Love.
Thank you.